once again, the headings up top might not be exactly right because I might want to call this something other than just a balance sheet. Maybe I want to call it a vertical analysis balance sheet or something like that. Maybe I don't want, the date might be fine here. Maybe I want negative numbers to have brackets around them. Maybe I want to remove the pennies. Maybe I don't want this information on the bottom. So we could then customize this. If we go to the customize in the classic view, we have this up top, divide by 1,000, no, but I could remove the pennies. I could make negative numbers bracketed and red, which is what I commonly do as a general customization. We don't have a lot of other customization like fonts or different colors, which again, we could get if we exported to Excel to do a little bit more customization, and that could allow you to stand out doing stuff that other people aren't doing, right? And then we could go into the headers and footers and say we could add our logo if we wanted to, company name, report title. Maybe we want balance sheet vertical analysis, which I'll probably spell wrong. Vertical analysis. Yeah, that's just horrible. Vertical analysis. For crying out loud. What is English your second language? Okay, back off, man. Spelling's, you don't need to spell anymore. You got this, the spell check is everywhere. Report period, so we can remove possibly, I'll keep the report period, date paired, time prepared on the footer, remove that, boom. And so now we've got a little bit cleaner. Maybe for external reporting, there's our negative numbers, nothing's on the footer. By the way, if you wanted to see that in the modern view, where would that be located? Let's switch it to the modern view. And we saw our comparison information here in the dropdown, percent of column. And then in the general options, we have the round amounts to the nearest. That's the remove the pennies, negative numbers bracketed and red. And then we have do header and footer. We have report period is there, company name is there. And then on the footer, I got rid of the date prepared and time prepared for the footer on down below. And so that's the two views currently in practice. Let's switch back to the classic view. That's going to be the general idea. Now, once you have that, if you want this to be part of your stock or standard procedure for month-end reporting that you then put in a package and give to a client, you might then customize the report, or I'm sorry, save customize of the report, maybe add a group for month-end reports or something like that, or external reports, adding that as the group. And then I got balance sheet vertical analysis, save it. And then when I go back into the reports, I can go to the reports down below, customize, and now I've got my balance sheet vertical analysis. All I should have to do is change the date range, and hopefully the formatting will be properly put in place. So let's go back to the balance sheet. Notice how many different report settings we could have, even when just thinking about the major financial statement reports, of which we've only looked at the balance sheet, but also have the income statement. We now have comparative reports comparing multiple periods, like more than two, like months, years, and so on. We then have comparative reports with just two periods, which we can then take the difference and the percent difference, horizontal analysis, percent increase or decrease over a period, which we can compare one month to another month, the current month like December to prior month December, one quarter to another quarter, the current quarter like fourth quarter to the prior fourth quarter, for example. And now we have the vertical analysis where we can basically do an analysis percentage vertical wise comparing to the total. And you could do that for multiple periods as well. So maybe I wanted to do it for 2 periods. Now, instead of using this method of looking at the prior period, this is what we would do if I wanted to take the difference of the 2 periods. If I want to take a vertical analysis of 2 periods, then I can do it this way, right? I can change this to 2024 to say 2025, and then change this to years and run it. And so now I've got the current period and the vertical analysis for it, for 2024 and then 2025. and then the vertical analysis for it. And of course, we could do more than 2 periods. We could do it on a monthly basis and run it. And now we've got the vertical analysis applied out to each month. There's no activity in this particular statement, but there they are. And you can get quite complex reports. So some of the questions will come up then. For example, you might say, if I'm giving these reports to someone else, do I want a simplified balance sheet, like a summary balance sheet, or do I just give them the standard balance sheet? And then if I give them a balance sheet, what if I add the vertical analysis to it? Should I give them a summary balance sheet and then a standard balance sheet and then add the vertical analysis, which is really just adding another column? Or should I just give them the balance sheet with the vertical analysis, which is more complex looking, but it gives them more information? Or I could just give them one that has a comparative balance sheet, last year versus this year, both of them having a vertical analysis in it, right? Which means you're getting an uglier looking report because it's got more detail in it, but it has more detail in it. So these are questions that you can come up to. How much data is too redundant? How simplified a report do you want so that you can have a presentation, for example, possibly giving things as easily as possible, as clean as possible, hopefully drawing people in so that you can maybe then drill down on further data. These are things to keep in mind as you're trying to put together your presentation or package that you're going to be giving to a client, remembering that clients usually oftentimes aren't accountants, and therefore you're going to try to give them the information in the way that you think is most useful to them to try to communicate what you think you need to communicate and give them confidence that you're going to be there at least when they need you, which is typically going to be at the end of the year for tax preparation, external reporting, working with the CPA firm, and so on, or doing the taxes yourself, or whatever is going to be happening at that time.